Before we begin, a quick and important disclaimer. This video is for informational and educational purposes only and should not be considered financial or legal advice. Insurance products, rates, and coverages are complex and vary significantly based on your individual circumstances, location, and driving history. Always consult with a qualified and licensed insurance professional to determine the best coverage for your specific needs. You know that feeling. It's the first of the month, you're scrolling through your bank statement and you see it. That familiar three-figure auto debit from your car insurance company. And for a second you just stare at it. You think about the last 30 days. You drove to the grocery store, maybe to the gym a few times, you picked up pizza on Friday night. Your car spent 95% of its life parked. In the driveway. In the garage. Yet you just paid the exact same premium as your neighbor who battles a 90-minute commute each way every single day. You paid the same as the person who drives for Uber on the weekends. Feels wrong. It feels like you're paying for a massive all-you-can-eat buffet when all you had was a glass of water and a dinner roll. For decades, this has been the unavoidable reality of car insurance in America. It's a one-size-fits-all system built for a world that, frankly, doesn't exist for millions of us anymore. The model was designed in an era where everyone drove to the office 5 days a week. It assumes a certain number of miles, a certain level of risk, and it lumps you into a giant bucket with thousands of other drivers. It doesn't care if you're a retiree who only drives to church on Sundays, a remote worker whose commute is a 10-step walk from the bedroom to the home office, or a city dweller who relies on public transit but keeps a car for weekend getaways. You all pay, and you all overpay. You are subsidizing the high-mileage drivers. But what if there was a way to break free from that system? What if you could pay for the insurance you actually use? Not based on some vague, outdated estimate, but on the exact number of miles you drive. This isn't a fantasy. This is the entire premise behind a new wave of insurance, and today, we're doing a deep dive into one of the most talked about players in this space, Mile Auto. By the end of this presentation, you are going to understand exactly how this company works from the ground up. We're going to expose the nuts and bolts of their pricing, reveal their secret weapon that makes them different from every other pay-per-mile competitor, and most importantly, we will give you the tools to figure out if this switch could realistically save you hundreds, or even over $1,000 a year. We'll cover who this is an absolute game changer for, and we'll be brutally honest about who should absolutely stay away. Now I know what you're thinking. Pay-per-mile? Sounds like a gimmick. What's the catch? Do they plug some creepy tracking device into my car that spies on me? Do they use a smartphone app to monitor my every turn, my every hard brake, and then jack up my rates if I'm not a perfect driver? These are the right questions to be asking because with some other companies the answer is yes. They use what's called telematics, little devices or apps that create a constant stream of data about your driving habits. But this is where Mile Auto flips the entire script. Their entire model is built on one radical, almost shockingly simple idea. They don't track you. At all. No tracking device. No mandatory smartphone app monitoring your driving. No big brother in your dashboard. So how on earth do they know how many miles you've driven? The answer is so low-tech it's brilliant. You take a picture. That's it. You use your phone to take a picture of your car's odometer. Let's walk through this because it's the core of how their entire system functions. It all starts with your rate, which is broken into two simple parts. First, there's a low monthly base rate. Think of this as your subscription fee. This flat fee is calculated much like traditional insurance. It's based on factors like your age, your driving record, the type of car you have, and where you live. This base rate covers your car while it's parked, protecting it from theft, vandalism, falling tree branches, you name it. It's your foundational coverage. For many people, this base rate can be as low as $30 or $40 a month. The second part of your bill is the per-mile rate. This is the variable part. This is typically just a few cents per mile, let's say for example 5 cents a mile. This is the rate that covers your car when it's actually moving on the road. So your total monthly bill is simply your base rate plus your per-mile rate multiplied by the number of miles you drove. Simple. Base rate plus per-mile rate x miles driven equals your bill. But again, how do they get that miles driven number without tracking you? When you first sign up and get approved, the very first thing you do is take a clear photo of your car's dashboard, showing the VIN number and the current odometer reading. You submit it through their website or app. That's your starting point. Then, at the end of each monthly billing cycle, they'll send you a reminder. You go out to your car, you take another picture of the odometer, and you send it in. Their system subtracts last month's reading from this month's reading, and voila, that's how many miles you drove. If you drove 400 miles and your per mile rate is 5 cents, you pay $20 for the miles you used plus your base rate. If you went on vacation and your car never left the garage, you drove 0 miles. You pay $0 for mileage that month and only your low base rate. This isn't just a small difference from their competitors. It's a philosophical canyon. Companies that use telematics are making a bet that they can analyze your driving behavior to predict your risk. They measure your speed, your acceleration, the time of day you drive, how hard you brake. Mile Auto's philosophy is fundamentally different. They believe the single greatest predictor of you getting into an accident is how often you're on the road. It's a simple, powerful correlation. The less you drive, the less risk you have. By ditching the invasive tracking, they are laser-focused on that 1 metric miles driven. This is a massive win for privacy-conscious consumers. It's a win for people who don't want to be penalized for braking suddenly to avoid a squirrel, or for driving late at night to pick up a sick relative from the airport. Your driving style is your business. The miles are their business. This simple, photo-based system is the engine that makes Mile Auto run. It allows them to offer a true pay-as-you-go model without the privacy trade-offs. It's designed for the modern low-mileage driver, who has been overpaying for years. But this simplicity also raises some very important questions. What if you forget to send the photo? What if you have to take an unexpected, 1,000-mile road trip to visit family? Will your bill suddenly skyrocket into the stratosphere? And what exactly counts as a mile? Are they all priced the same? These are critical details that determine whether this is a financial masterstroke or a potential trap. And we're going to dissect the answers to every single one of those questions. So let's start with the most fundamental question of all, the one that underpins this entire concept. How in the world do they actually know how many miles you're driving? Because in the world of usage-based insurance, this is the million-dollar question. For years, the answer has been something that makes a lot of people uncomfortable. It's the telematics device. The little black box or dongle that you have to plug into your car's OBD2 port, the same port your mechanic uses to diagnose a check engine light. This device then becomes a silent passenger on every trip, tracking not just your mileage, but often your speed, your braking habits, your acceleration, and even the time of day you drive. It's a constant stream of data flowing from your car to your insurance company. And for a lot of drivers, that feels like a major invasion of privacy. It feels like having a backseat driver who also happens to set your insurance rates, judging every single move you make. Mile Auto saw this. They understood that for this model to truly appeal to the masses, it had to be simpler, less invasive, and built on trust, not surveillance. So, their solution is radically different. And honestly, it's almost laughably simple. There is no device to plug in. There is no app constantly tracking your location via GPS. Instead, all they require is a photo. That's it. You just take a picture of your car's odometer with your smartphone once a month and submit it through their app or website. It's the 21st century version of the honor system, but with a simple verifiable check. This single decision completely changes the game. It removes the big brother element that turns so many people off from usage-based insurance. They don't care if you braked hard to avoid a squirrel, or if you drove home from a late movie at 1 a.m. They are not monitoring your behavior. They are only interested in one single data point: the total distance your car has traveled. This brings us to the second critical question. What exactly counts as a mile? Is a highway mile treated differently than a city mile? Is a mile driven at rush hour more expensive than a mile driven on a Sunday morning? With those telematics devices, the answer is often yes. Those systems are building a complex risk profile on you. But with Mile Auto, the answer is a refreshingly simple no. A mile is a mile is a mile. It is a unit of distance, pure and simple, as read directly from your car's own odometer. The context of that mile is completely irrelevant to them. Think about what that means. You are not being penalized for your lifestyle. You're not being financially dinged for having a commute that involves more stop-and-go traffic. You're just paying for the distance you cover, period. This strips away all the complicated and, frankly, anxiety-inducing algorithms that other companies use. It's a transparent, one-to-one relationship. You drive a mile, you pay for a mile. Okay, so the tracking is simple and the definition of a mile is simple. But how does this translate into an actual bill? This is where we need to break down the core formula of how you are charged, because your monthly premium is actually made of two distinct parts. The first part is what's called the base rate. You can think of this as your subscription fee for being insured. This is a flat, fixed amount you pay every month, regardless of whether you drive 0 miles or 1,000 miles. This base rate covers your car for everything that can happen to it while it's not being driven. This is your comprehensive and collision coverage when it's parked. So, if a tree branch falls on your car during a storm, if it gets stolen from your driveway, or if it's damaged in a parking lot hit and run, your base rate is what covers that. It's the cost of keeping your car protected 24/7, no matter what. This rate is personalized to you, just like with traditional insurance. It's calculated based on the usual factors: your driving record, your age, the type of car you drive, where you live, and the coverage limits you choose. For some, this might be as low as $30 or $40 a month. For others, it might be higher. But the key is, it's consistent and predictable. The second part of the formula is the per-mile rate. This is the variable component. This is where the magic happens for low-mileage drivers. After your base rate is calculated, Mile Auto also assigns you a specific cost for every mile you drive. This could be just a few cents, say for cents, 6 cents, maybe 10 cents per mile. This rate is also personalized based on your risk factors. So, how does it work in practice? At the end of the month, they take the number of miles you drove, let's say 300 miles, and they multiply it by your per-mile rate. If your rate is 5 cents per mile, that's 300 times 0.05, which equals $15. Your total bill for that month would then be your fixed base rate plus that $15. Let's use a real-world example. Imagine a driver named Alex who works from home. With his old traditional insurance, he was paying a flat $140 every single month. He was driving about 500 miles a month, a few trips to the grocery store, the gym, visiting friends on the weekend. He was essentially paying the same rate as his neighbor who had the exact same car and driving record but commuted 50 miles every day. Alex was subsidizing his neighbor's risk. Then Alex gets a quote from Mile Auto. They offer him a base rate of $45 per month and a per-mile rate of 6 cents. Let's do the math for his typical month. 500 miles driven times 6 cents per mile equals $30. You add that to his $45 base rate. His total bill for the month is $75. That's a savings of $65 every single month, or $780 a year, without changing his driving habits one bit. The next month, he takes a short vacation and only drives 200 miles. His bill that month, $45 plus 200 times 6 cents, which is $12. His total is just $57. The system is directly rewarding him for driving less. This model fundamentally realigns the logic of car insurance. It's based on a simple, undeniable truth. The less you are on the road, the less likely you are to be in an accident. Your exposure to risk is lower. Traditional insurance acknowledges this, but only in a very broad, clumsy way, by giving you a small, low-mileage discount if you drive under, say, 7,500 miles a year. Pay-per-mile insurance takes that logic to its ultimate conclusion, making every single mile you don't drive a direct saving in your pocket. But I know what you're thinking. This all sounds great for the predictable, low-mileage months. But what about the outliers? What happens when you decide to take a cross-country road trip? If you drive 3,000 miles in a month, are you suddenly going to be hit with an astronomical bill that wipes out all your savings? This is the number one fear that holds people back from even considering this type of insurance. It's a valid concern. If your per-mile rate is 7 cents, a 3,000-mile trip would add $210 to your bill on top of your base rate. That's a nasty surprise. And this is where Mile Auto has another critical feature built into their system to prevent this exact scenario. It's a daily mileage cap. Most states where they operate have a cutoff point for how many miles you can be charged for in a single day. This cap is typically set at 250 miles, though in some states it can be as low as 150. Let's see how this works. Let's say your cap is 250 miles per day. On a Monday, you drive 30 miles. You get charged for 30 miles. On Tuesday, you decide to drive from Los Angeles to San Francisco, a trip of about 380 miles. Even though you drove 380 miles, you will only be charged for the first 250. Those extra 130 miles are essentially free for that day. This acts as a crucial safety net. It allows you to take those occasional long trips for vacation or family visits without the fear of a punitive, budget-busting insurance bill. It gives you the best of both worlds. Incredible savings for your everyday low-mileage life, and a predictable capped cost for those rare long-distance adventures. It transforms the system from a potential trap into a flexible tool. So the mechanism is simple. A monthly photo of your odometer. The formula is transparent. A fixed base rate for protection while parked, plus a variable per-mile rate for when you're driving. And the biggest fear, runaway costs from long trips, is neutralized by a daily mileage cap. This is the fundamental architecture of how it all works. It's a system designed from the ground up to be fair, transparent, and tailored to the actual risk you represent as a driver. But knowing the architecture is only half the battle. The real question is, does the math actually work out in your favor? Who is the ideal candidate for this? Are you a student, a retiree, a remote worker who could save a fortune? And just as importantly, who is this model absolutely wrong for? Who are the people that should run, not walk, away from this type of insurance? Because the answer isn't the same for everyone. Now we need to move from the how to the who. We're about to dig into the specific profiles of drivers who stand to benefit the most, and the ones who could end up paying far more than they would with a traditional plan. The details here are what separate a smart financial decision from a costly mistake. So let's paint a picture of the absolute perfect candidate for Mile Auto. Meet Sarah. Sarah is a 35-year-old graphic designer who, since 2020, has worked almost entirely from home. She lives in a quiet suburb of a mid-sized city, somewhere like Raleigh, North Carolina, or Boise, Idaho. She owns a reliable 2019 Honda CR-V. Before she switched, her traditional insurance policy was costing her about $140 a month. That's $1,680 a year. Why? Because her old insurance company didn't really care that her car sat in the driveway 5 days a week. They priced her policy based on her age, her clean driving record, her location, and the potential for her to drive, lumping her in with everyone else in her demographic who might be commuting an hour each way. But Sarah's reality is different. She drives to the grocery store once a week, maybe 10 miles round trip. She goes to the gym 3 times a week, that's another 24 miles. On the weekend, she might visit a friend across town or go to a farmer's market, adding another, say, 50 miles. All in, she's driving about 84 miles a week, which comes out to roughly 360 miles a month. Annually, she's barely cracking 4,500 miles. When Sarah gets a quote from Mile Auto, they look at her same clean record, her same safe car, and her same suburban zip code. They determine her fixed base rate is going to be $45 a month. This is the fee she pays just to keep the policy active, covering her car while it's parked, protecting it from theft, hail, or a falling tree branch. Then they quote her a per-mile rate of 6 cents. That's $0.06 for every mile she drives. Now let's do the math. Her 360 miles in a month, multiplied by 6 cents a mile, equals $21.60. Add that to her $45 base rate, and her total monthly bill is $66.60. Compare that to the $140 she was paying before. Sarah is saving over $73 a month. That's nearly $900 a year. For Sarah, switching to Mile Auto isn't just a small win. It's a massive, undeniable financial upgrade. She's no longer subsidizing the lifestyles of supercommuters. She is paying for exactly what she uses. People like Sarah, the remote worker, the retiree who only drives to the golf course, and the doctor, the college student who lives on campus and only uses their car to go home for the holidays, or the family with a third weekend car. These are the people Mile Auto was built for. If you see yourself in this description, your ears should be perking up. But for every Sarah, there's a David. David is a 42-year-old project manager who lives in the suburbs of a major metropolitan area like Atlanta or Dallas. He has to be on-site at construction projects, and his commute is a beast. It's a 40-mile drive each way in heavy traffic. That's 80 miles a day, 5 days a week. That's 400 miles a week right there just for work. Add in weekend errands, coaching his kids' soccer team, and family visits, and David easily drives 2,000 miles a month. That's 24,000 miles a year, which is almost double the national average. David has a good driving record and a safe 2021 Ford F-150. His traditional insurance policy is $200 a month, or $2,400 a year. It's expensive, but it's a predictable, fixed cost. He sees an ad for Mile Auto and thinks, maybe I can save some money. He gets a quote, because he has a similar clean record to Sarah, but lives in a more congested area and drives a more expensive truck. His base rate comes in a little higher, let's say $60 a month. His per-mile rate is quoted at 7 cents, a penny more than Sarah's due to his location and vehicle. Now let's run David's numbers. His 2,000 miles a month, multiplied by 7 cents a mile, is $140. Add that to his $60 base rate. His total monthly bill with Mile Auto would be $200. exactly what he was paying before. But here's the kicker. That's just for an average month. What about the month he has to drive to a project site in another state? What about the family road trip vacation they take every summer? In those months, his mileage could easily double, pushing his insurance bill to $340 or more. For David, Mile Auto introduces a terrifying volatility into his budget. Every single mile he drives, he's mentally calculating the cost. The freedom of the open road is replaced by the anxiety of a running taxi meter. David, the supercommuter, the outside sales representative, the DoorDash or Uber driver, these individuals would be financially decimated by a pay-per-mile model. It's simply the wrong tool for the job. So the line is clear, right? Low mileage, good. High mileage, bad. Not so fast. This is the part where most people get it wrong because there's a third crucial profile we need to examine. Let's call her Maria. Maria is 25 and lives in the heart of a dense city like Chicago or Philadelphia. She's a perfect low-mileage candidate on the surface. She doesn't have a dedicated parking spot, so she moves her 2017 Hyundai Elantra for street cleaning twice a week. She works from home and takes the train for most things. She drives maybe 250 miles a month, even less than Sarah. She should be a slam dunk case for savings. But Maria has two strikes against her in the eyes of an insurance algorithm. First, her zip code. Living downtown means a much higher risk of theft, vandalism, and accidents due to sheer traffic and vehicle density. Second, 3 years ago, she had a minor at-fault fender bender in a parking garage. No one was hurt, but it's still on her record. When Maria gets a quote from Mile Auto, they don't just see her low mileage. They see the high-risk zip code and the past accident. So while a traditional insurer might quote her $170 a month, Mile Auto has to price in that risk to her fixed base rate. Her base rate comes back not at $45, but at $110 a month. Her per-mile rate is 8 cents, higher because of her car's location and her driving history. Let's do Maria's math. 250 miles times 8 cents is $20. Add that to her massive $110 base rate. Her total monthly bill is $130. Now, is that cheaper than her $170 traditional plan? Yes, she's still saving $40 a month, but it is nowhere near the incredible savings that Sarah, the suburban driver, is getting. And here's the critical point. It's entirely possible that a different traditional insurance company, one that's more competitive in her specific urban market, could offer her a flat rate of $120 a month. In that case, the traditional plan would actually be cheaper than Mile Auto, despite her incredibly low mileage. This is the nuance that gets lost in the advertising. Mile Auto is not a simple two-part equation. It's a three-part equation. Your base rate, your per-mile rate, and your mileage. And that base rate is the silent killer. It's calculated using all the traditional, sometimes frustrating factors you're used to: your driving history, your age, your credit score in most states, the type of car you drive, and most importantly, where you park it at night. If your base rate is too high, no amount of low mileage can make the math work in your favor. You could leave your car in a garage for a month and drive 0 miles, but you'd still be paying that base rate of $40, $60, or even over $100. So before you even start thinking about your mileage, you have to honestly assess your risk profile. Do you have a recent accident or a speeding ticket? Do you live in an area known for car break-ins? Are you a younger driver with less experience? These factors can inflate your base rate and erode, or even completely eliminate, the potential savings from driving less. The promise of pay-per-mile is powerful, but it's a promise that's filtered through the cold, hard lens of traditional risk assessment. And understanding how you stack up in that assessment is the first step. The next is understanding exactly how the company tracks those miles you drive, because it's not what you think. There is no plug-in device, no GPS tracking your every move. The method Mile Auto uses is far simpler, and it creates a whole new set of responsibilities for you, the driver. So, how does the company track those miles you drive? Because it's not what you think. There is no plug-in device, no GPS tracking your every move. The method Mile Auto uses is far simpler, and it creates a whole new set of responsibilities for you, the driver. It all comes down to a single simple action: taking a picture. That's it. No hardware. No apps constantly running in the background draining your battery. No little brother in the cloud watching you drive to the grocery store. Their entire system is built on the honor system, but with a digital handshake. Think of it like this. When the power company needs to know how much electricity you used, they send someone to read the meter on the side of your house. With Mile Auto, you are that person. You are responsible for reading your own meter, the odometer on your dashboard. Here's how the process actually unfolds from day one. You sign up for a policy, you get your base rate locked in, and you're officially insured. For the first month, you just drive. There's nothing to do. But as you approach the end of that first billing cycle, you'll get a notification. It'll come via email or a text message, and it's a simple request. It's time to report your mileage. This is your cue. You walk out to your car, you turn it on so the digital odometer lights up, you pull out your smartphone, and you snap a clear, well-lit photo of your dashboard, making sure the mileage is perfectly legible. Then you upload that photo directly to MileAuto through their website or a link they provide. Their system, likely using a combination of AI and human review, reads the number. It then compares that number to the one you submitted when you first started your policy, or the one from the previous month. Let's say last month your odometer read 50,000 miles. This month, your photo shows it reads 50,600 miles. The math is simple. 50,600 minus 50,000 equals 600 miles. That's the number they use to calculate your bill. They take those 600 miles, multiply it by your specific per mile rate. Let's say it's 5 cents, and that comes out to $30. They add that $30 to your monthly base rate, and that's your total premium for the month. It's an elegant, low-tech solution in a high-tech world. Puts a massive amount of trust in you, the customer. But with that trust comes responsibility. And this is where the system's potential weaknesses, and your own obligations, really come into focus. The first and most obvious question is, what if you forget? Life gets busy. An email gets buried, a text gets ignored. What happens if you just don't send the photo? Well, MileAuto has a system for this. You don't get your policy canceled on day one. They'll send you reminders. They'll give you a grace period, which typically lasts for a few days. But if you continue to ignore the requests and that grace period expires, they have to assume you've been driving. They can't just charge you zero. So they'll charge you based on an estimate. This estimate is usually based on the national average mileage, which is around 1,200 miles per month, or it might be based on the mileage you estimated you'd drive when you first signed up. In almost every scenario, this default charge will be significantly higher than what a low-mileage driver would normally pay. It's their way of protecting themselves, and it's a powerful incentive for you to get that photo in on time. Consistently fail to report your mileage, and you risk non-renewal or even cancellation of your policy. The responsibility is squarely on your shoulders. Now, this leads to the second, more cynical question. The one you're probably thinking about right now. What's stopping someone from cheating? If it's just a photo, what's to stop a driver from taking a picture, then driving another 500 miles before the end of the month? Or what's to stop someone from using Photoshop to alter the numbers on the odometer? Seems like a system ripe for fraud. And you're right, the temptation is there. But MileAuto is not naive. They have several layers of defense against this. First, there's the data and timing. When you upload the photo, it has metadata attached to it, like the date and time it was taken. Sending a photo from 2 weeks ago is an immediate red flag. Their system is looking for patterns. If you report exactly 200 miles one month, and then 1,500 the next, and then 200 again, that erratic pattern will trigger a review. They are a data company as much as they are an insurance company. Second, think about the long-term game. You might get away with fudging the numbers for a month or two, but what happens when you need to file a claim? Imagine you get into an accident. The first things the insurance adjuster will ask for are the details of the incident, including the location and time. They will also require a photo of the damage, and guess what's often visible in that photo? The dashboard. If the odometer in your crash photo reads 65,000 miles, but you've only been reporting mileage that should put you at 61,000, you have a massive problem. That's not just a discrepancy, that's insurance fraud. It's a criminal offense. Your claim will be denied instantly, your policy will be canceled, and you could be on the hook for the entire cost of the accident. On top of that, they will likely report you to the National Insurance Crime Bureau, which will make it incredibly difficult and expensive for you to get insurance from any company in the future. The short-term gain of saving a few bucks is obliterated by the catastrophic long-term risk. It is simply not worth it. And finally, there's the most basic check of all: vehicle maintenance records. When you take your car in for an oil change, a tire rotation, or any repair, the mechanic logs the date and the exact mileage in their system. These records are often shared through networks like Carfax. If you ever file a claim, MileAuto has the right to pull these records. If your Jiffy Lube receipt from 3 months ago shows a higher mileage than the photo you submitted last week, The fraud is undeniable. They have built a system on trust, but it's a trust that is verified through multiple independent channels. This photo-based system is also the entire foundation of their privacy promise. By not using a telematics device or a smartphone app with location services, they are making a clear statement. They don't care where you drive. They don't care if you went to a political rally, a specific church, or a bar late at night. They don't care if you're a leadfoot who accelerates hard from every stoplight. Traditional telematics programs track all of this. They monitor your speed, your braking habits, the time of day you drive, and your exact routes. All of that data is used to build a risk profile of you that can, and often does, affect your rates. Mile Auto completely sidesteps this. Their contract with you is simple. We will cover you based on a few traditional factors, and you will pay us based on the distance you travel. Period. The photo of your odometer is the only piece of tracking data they ever receive. So this is the new dynamic. You are an active participant. Each month, you and the company engage in a simple transaction. You provide a single data point, a photograph, and they provide you with a customized bill. It's a fundamental shift from the set it and forget it model of traditional insurance. You have to be organized, you have to be honest, and you have to be consistent. For the right person, the person who is diligent and who genuinely drives less, this system can feel empowering. You are in direct control of a significant portion of your premium. Your actions, or in this case your lack of driving, are rewarded every single month. But this simple system raises a much more complex question. Once you send that photo, what happens if the miles you drove weren't just simple commutes? What if you used your car for work, delivering pizzas, or driving for a rideshare service? What happens if you took a massive 2,000-mile cross-country road trip one month? Does Mile Auto treat all miles the same? The answer is critical, and it could make or break whether this insurance is truly right for you. Let's dive straight into that hornet's nest, because this is where the theory of pay-per-mile insurance meets the messy reality of American life. The core question is simple. Does a mile driven to the grocery store cost the same as a mile driven for Uber? Is a mile on your daily 10-mile commute billed the same as mile number 300 on a cross-country adventure to see the Grand Canyon? The answer is a resounding no. And understanding the difference is absolutely fundamental. First, let's tackle the explosive issue of commercial driving. This includes ride-sharing for companies like Uber and Lyft, and delivery services like DoorDash, Instacart, or Amazon Flex. This is, without a doubt, one of the biggest points of confusion for people exploring new insurance models. You might think, hey, it's my car, I'm driving it. A mile is a mile, right? From an insurance perspective, that is dangerously wrong. When you sign up for a standard, personal auto insurance policy, and this applies to Mile Auto just as it does to traditional insurers like Geico or Progressive, you are insuring your car for personal use. That means commuting to work, running errands, picking up the kids, going on vacation. The moment you turn on that app and accept a ride or a delivery, you have fundamentally changed the nature of the risk. You're no longer just a driver. You're operating a commercial vehicle. You're driving more, often in unfamiliar areas, under time pressure, and with the added distraction of a work-related app. The statistical probability of getting into an accident skyrockets. So what does Mile Auto do? They, like virtually every other standard insurer, do not cover commercial use on their basic personal policy. If you get into an accident while you have the Uber app on and are waiting for a ride, or while you're actively driving a passenger, your personal Mile Auto policy will likely deny the claim. This isn't a gotcha from Mile Auto. It's a standard industry-wide distinction between personal and commercial risk. The companies you drive for, like Uber and DoorDash, know this. That's why they provide their own layer of insurance that kicks in during specific phases of your work. However, there can be dangerous gaps in that coverage, which is why a specialized rideshare endorsement or a full commercial policy is often necessary. The bottom line is this. If you are a gig economy driver, you cannot simply sign up for Mile Auto's base plan, turn on your app, and assume you're covered. You absolutely must disclose your commercial activities to them. They may offer a specific endorsement or a separate policy, or they may determine that their product isn't the right fit for your level of commercial use. Hiding this information is a catastrophic gamble. An accident could lead to a denied claim, getting your policy canceled, and leaving you personally on the hook for tens or even hundreds of thousands of dollars in damages. So, for the question of commercial miles versus personal miles, the answer is they are not treated the same. They are two entirely different worlds of risk, and you must have the correct, specific coverage for any miles you drive for business. Okay, with that critical public service announcement out of the way, let's pivot to the much more exciting question. the Great American Road Trip. This is where the fear of paper mile really kicks in for a lot of people. You might live 5 miles from your office, drive less than 8,000 miles a year, and be the perfect candidate for Mile Auto. But you also love to visit your family in another state for Thanksgiving, which is a 900-mile round trip. Or maybe you've been dreaming of that 2-week, 3,000-mile journey through the national parks. The thought of paying for every single one of those miles suddenly makes the whole idea feel terrifying. A single month could wipe out an entire year's worth of savings. This is the exact problem that would make paper mile insurance a non-starter for millions of Americans. And Mile Auto knows this. That's why they built in a feature that is, frankly, their secret weapon. It's the single most important detail that separates them from a purely linear pay for every single mile model. It's called the daily mileage cap. Here's how it works. While you do pay a per-mile rate, you only pay for the miles you drive up to a certain limit each day. After you hit that daily cap, every single mile you drive for the rest of that day is completely free. Think of it like a cell phone plan from the old days. You might have paid for the first 500 minutes, but any minutes after that were free for the rest of the month. Mile Auto does this on a daily basis. The cap varies by state and by individual driver, but it's typically set at 150 miles, or in some cases, 250 miles per day. For our example, let's use the more common 150-mile cap. Now let's replay that road trip scenario. You wake up in a hotel in Kansas, ready for a long haul to the mountains of Colorado. You get on the highway and drive 400 miles that day. With a naive paper mile system, you'd be dreading the bill. If your rate was, say, 5 cents per mile, that's a $20 day just for the mileage portion. But with Mile Auto's 150-mile cap, something incredible happens. They track your miles, you hit 150 for the day, and that's it. You're done. The meter stops. The remaining 250 miles you drove that day, all the way to your destination in Colorado, cost you absolutely nothing. You are only billed for the first 150 miles. The day cost you $7.50 in mileage, not 20. Let's apply this to a full 2,000-mile cross-country trip over, say, 10 days of driving. Let's imagine you drive 200 miles each day. A system without a cap would bill you for all 2,000 miles. At 5 cents a mile, that's a $100 mileage charge for your trip, on top of your base rate. With Mile Auto's 150-mile cap, you are only billed for 150 miles each day. So for those 10 days, you're not billed for 2,000 miles. You're billed for 1,500 miles. The cap just saved you 25% of the cost. But road trips aren't usually that uniform. Let's say on day 1 you drive 500 miles. Day 2 you only drive 50 miles to a local attraction. And day 3 you drive another 450 miles. Without a cap, that's 1,000 miles you'd pay for. With Mile Auto's cap, on day 1 you pay for only 150 of those 500 miles. On day 2 you pay for all 50 miles because you were under the cap. On day 3 you pay for only 150 of those 450 miles. So instead of being billed for 1,000 miles, you are only billed for 350 miles. The daily mileage cap just saved you 65% on your insurance costs for those 3 days of your vacation. This is a complete game changer. It's the feature that transforms Mile Auto from a niche product for city dwellers who barely drive into a viable, and often brilliant, option for a huge swath of the country. It removes the single biggest fear, the punishment for taking a vacation. It means you can have your cake and eat it too. You get the massive savings from your low-mileage daily life, without the crippling penalty for the occasional and totally normal long-distance trip. So why do they do this? It's smart business. They know that if they penalized you for taking a vacation, you just switch back to a traditional insurer the month after you got the bill. The cap is a retention tool. It acknowledges that life happens, and people need the freedom to drive without constantly staring at a mileage meter with a sense of dread. It makes their product humane. So to recap this crucial point, not all miles are created equal. Commercial miles are a completely separate category that your personal policy does not cover. You must address that with specific commercial or rideshare coverage. But for your personal miles, Mile Auto has created a brilliant system. It differentiates between your short, everyday trips and your long-distance adventures. By capping the billable miles each day, they ensure you still get the benefit of a paper-mile system, without the anxiety. It's a safety net for your wallet. This, of course, brings up the next logical question. If they have this cap, and they are tracking miles so precisely, how exactly are they doing it? What technology is involved? Is there a device I have to plug into my car? Are they using my phone's GPS? And what about my privacy? Let's dive right into the mechanics of it, because this is where the rubber literally meets the road. The core of Miles system is a small, simple device called the Mile Auto. And let me just say, if you're picturing some giant, complicated box with a dozen flashing lights and an antenna sticking out, you can relax. This thing is tiny, about the size of a large thumb drive. It's discreet. You plug it in and you forget it's even there. So where does it plug in? This is the best part. It goes into your car's OBD2 port. Now, if you just heard OBD2 and your eyes glazed over, stick with me for a second because it's incredibly simple. OBD2 stands for Onboard Diagnostics, and it's basically your car's brain port. It's the same port your mechanic plugs their computer into to figure out why your check engine light is on. Every single car and light truck manufactured for the United States since 1996 has one. By law, it's usually located under the dashboard, near the steering wheel column. Finding it is often easier than finding a dropped French fry under your seat. And the installation process? It's designed to be foolproof. You don't need any tools. You don't need to call your tech-savvy nephew. You literally find the port, you plug the Mile Auto device in, it only fits one way, and you wait for a little chirp or a light to confirm it's connected. That's it. The entire process takes, and I'm not exaggerating, about 30 seconds. From there, the device pairs with your smartphone app, and you're good to go. Now, this is a critical distinction to make. Some other usage-based insurance programs rely entirely on your smartphone's GPS and sensors. They want you to download an app that runs in the background, constantly monitoring your location, your speed, your acceleration, your braking habits, everything. It's a massive drain on your phone's battery and, more importantly, a huge question mark for your privacy. This brings us to the absolute biggest concern people have, and rightly so. What is this little device actually tracking? And what is it not tracking? Let me be as clear as humanly possible on this point. The Mile Auto device is designed to do one thing and one thing only. It measures the number of miles you drive. That's it. It's a high-tech, hyper-accurate odometer. It determines the mileage by accessing the car's own internal data, the same data that feeds the odometer on your dashboard. It doesn't need to triangulate your position from space to do that. So let's talk about what it does not track. The Mile Auto device does not have a GPS tracker. It does not know where you are. It doesn't know if you drove to the grocery store, to your cousin's house, or on a cross-country road trip to see the world's largest ball of twine. It has no idea about your location. Furthermore, it does not monitor your driving behavior. It doesn't know how fast you're driving. It doesn't know if you accelerate like a drag racer or a grandma on a Sunday drive. It doesn't know if you brake hard because a deer jumped out, or if you take corners at a snail's pace. It doesn't track the time of day you're driving, whether it's during rush hour or at 3 a.m. This is the single most important difference between Miles model and traditional telematics programs for many of the big insurance giants. Those other programs create a driver score for you. They watch you like a hawk. They'll see you braked hard once and ding your score. They'll see you drove late at night and ding your score. They are constantly judging your every move behind the wheel to adjust your rates. Mile doesn't do that. Their philosophy is fundamentally different. They believe that if you drive less, you are less of a risk, period. It's a simple, direct correlation. They aren't trying to be your co-pilot or your driving instructor. They are simply measuring distance. So, if the device isn't tracking your location, what's the smartphone app for? The app is your dashboard. It's your user interface for the service. It's where you can see a summary of your trips, check how many miles you've been billed for, view your policy documents, and access your insurance card. It's your control center. And yes, the app does have features that use your phone's location services, but these are features you control and are designed to help you. For example, they offer roadside assistance. If you get a flat tire, you can use the app to request help, and it will use your phone's GPS to pinpoint your location so the tow truck can find you. That makes perfect sense. Some versions of the app also have a Find My Car feature, which is a convenience for you, not a tracking tool for them. The key is that the core mileage tracking for your bill is happening through the OBD2 device, independent of your phone's GPS. This approach effectively solves the privacy problem. By separating the act of measuring miles from the act of tracking location and behavior, they give you the benefit of a usage-based price without the creepy feeling of being constantly monitored. Let's talk about the data itself for a moment. The mileage data that is transmitted from the device is encrypted. It's sent securely to their servers. Mile has a very strict privacy policy that states they do not sell your personal driving data to third parties for marketing or any other purpose. This is your data, and its use is limited to calculating your insurance premium. Now let's address a few common what-if scenarios that people always ask about. What if I unplug the device? Well, the device is a required component of the insurance policy. If it's unplugged for an extended period, you'll get notifications through the app and email reminding you to plug it back in. If it remains unplugged, it could lead to the cancellation of your policy because they can no longer accurately measure your usage, which is the entire basis of your contract with them. So you need to keep it plugged in. What about my car's battery? This is a great question. The device is engineered to be extremely low power. When your car is turned off, the Mile Auto device goes into a sleep mode, drawing a minuscule amount of power, comparable to your car's own internal clock. For any reasonably healthy car battery, the drain is completely negligible. You could leave your car parked for weeks without any issue. What happens if I get a new car? The process is simple. You just unplug the device from your old car before you sell it or trade it in. Then you contact Mile, update the vehicle information on your policy, and they'll walk you through plugging the same device into your new car. It's a seamless transition. So to recap the technology, it's a tiny plug-and-play device that taps into your car's standard diagnostic port. It's a glorified, secure odometer. It measures one thing and one thing only, the number of miles you drive. It does not have GPS, it does not watch how you drive, and it doesn't care where you go. It's a system designed to be accurate, simple, and most importantly, respectful of your privacy. This all sounds great in theory. The technology is smart, and the privacy-first approach is a massive breath of fresh air in an industry that increasingly wants to monitor everything we do. But all of this leads to the most important question of all. How does this simple mileage count actually translate into the bill I get every month? How does the money part of it actually work? What is a per-mile rate? How is it determined? And are there any hidden costs I need to be aware of? Let's break it down because this is the absolute core of the pay-per-mile promise. Your bill from a company like Mile Auto is fundamentally split into two simple parts. Think of it like your cell phone bill used to be a base fee for having the line, and then a charge for how much you actually used it. It's the same logic. You have a fixed base rate and a variable per-mile rate. That's it. Your total monthly bill is simply your base rate, plus your per-mile rate multiplied by the number of miles you drove. So let's start with that first piece, the base rate. This is a flat fee you pay every single month, regardless of whether you drive 0 miles or 1,000 miles. Now you might be thinking, wait a minute, if I don't drive, why am I paying anything at all? Isn't this supposed to be pay-as-you-go? And that is a perfectly logical question. The base rate exists because your car is still at risk even when it's just sitting there. This part of your premium covers what's known in the insurance world as your comprehensive and collision coverages while the car is parked. Think about it. Your car could be hit by a falling tree branch during a storm, could be stolen from your driveway, could be vandalized. A shopping cart could roll into it in a parking lot. None of these things have anything to do with you actively driving. Your base rate is the cost to keep your car protected against that stationary risk, 24 hours a day, 7 days a week. It's the insurance that protects the physical asset, your vehicle, from damage or loss when it's not in motion. So, how do they decide what your base rate is? Well, this part is calculated almost exactly like traditional insurance. They look at the classic factors. First, your car. A brand new, expensive luxury SUV will have a higher base rate than a 10-year-old sedan because it costs more to repair or replace if it gets damaged or stolen. They'll also look at your location. If you live in an area with a high rate of auto theft or severe weather events like hail, your base rate will be higher to reflect that increased risk. And finally, they look at you, the driver. Your driving history, your age, and in some states, your credit-based insurance score can all influence this fixed monthly cost. Just like with any other insurer, the base rate is essentially the predictable, stable part of your insurance bill. Now for the exciting part, the variable part, the per-mile rate. This is the magic number. It's a tiny cost, usually just a few cents, that you pay for each and every mile you drive. If your per-mile rate is say 6 cents and you drive 10 miles to the grocery store and back, you've just added 60 cents to your monthly bill. This is the part of your insurance that covers your risk while the car is in motion. This is what pays for your liability coverage, the protection against damage or injury you might cause to other people and their property if you get into an accident. It also contributes to your collision coverage for at-fault accidents. The logic is simple and powerful. The more you're on the road, the higher the statistical probability that you could be involved in an incident. The per-mile rate directly ties your cost to your actual exposure to that risk. So, how is this rate determined? It's calculated using the very same factors as the base rate. Yes, you heard that right. The same things that determine your fixed cost also determine your variable cost. Why? Because the risk you represent as a driver doesn't just disappear when you start the engine. A younger, less experienced driver will likely have a higher per-mile rate than a 45-year-old with a perfect record, because statistically, their risk of an accident per mile driven is higher. If you have multiple at-fault accidents on your record, your per-mile rate will be higher. If you drive a high-performance sports car, your per-mile rate will be higher than someone driving a minivan, because the potential for a high-speed, high-cost accident is greater. So Mile Auto isn't just looking at how many miles you drive. They're looking at the specific risk profile associated with your miles. Let's make this real with a clear example. Let's invent a driver named Jessica. Jessica is 38, lives in a quiet suburb of Austin, Texas, and she works from home 3 days a week. She has a clean driving record and drives a 2020 Toyota RAV4. She gets a quote from Mile Auto. Based on her profile, safe driver, safe car, low risk area. Mile Auto calculates her base rate to be $45 per month. This covers her RAV4 against theft, hail, or vandalism while it's parked in her driveway. Then they calculate her per mile rate. Again, because of her great record and safe vehicle, they determine her rate is just 7 cents per mile. Now let's look at her first month. Jessica is a typical low-mileage driver. She drives to the office twice a week, runs errands, goes to the gym, and sees friends on the weekend. At the end of the month, the Mile Auto app shows she drove a total of 500 miles. So here's her bill. It's the base rate of $45, plus the mileage cost. The mileage cost is 500 miles multiplied by her 7-cent rate, which equals $35. So her total bill for the month is $45 plus $35, which comes out to $80. Compare that to a traditional insurance policy, which might have quoted her a flat rate of $130 per month, regardless of whether she drove 500 miles or 1,500 miles. For Jessica, the savings are immediate and substantial. But this brings us to that critical question of hidden costs and the big what if. What happens if Jessica has an unusual month? What if she decides to take a road trip from Austin to visit her family in Colorado, a 900-mile drive each way? Is she going to get a catastrophic insurance bill? This is the #1 fear people have about pay-per-mile insurance, and it's where one of the most important and frankly, best features comes into play: the daily mileage cap. Mile Auto and most companies like it know that you're not going to stay home forever. They know people take road trips. So to prevent you from getting a punishing bill, they cap the number of miles you're charged for in any single 24-hour period. Typically, this cap is set at 250 miles per day. In some states like Illinois, it's even lower at 150 miles. Let's see how this protects Jessica. On the first day of her road trip, she drives 550 miles. Instead of being charged for all 550 miles, the cap kicks in. She is only charged for the first 250 miles of that day. So, her charge for that day of driving isn't 550 times 7 cents, which would be over $38. Instead, it's 250 times 7 cents, which is just $17.50. The other 300 miles she drove that day are essentially free from an insurance cost perspective. This is a game changer. It means you get the benefit of low costs for your everyday, low-mileage life. But you're also protected from a massive bill when you need to drive long distances. It gives you the best of both worlds. The daily cap is the built-in safety net that makes pay-per-mile viable for real-world drivers. It's not a hidden cost. It's a hidden benefit. So, when you get your monthly statement, it's incredibly transparent. It will clearly show your fixed base rate. It will show your per-mile rate. It will list the number of miles you were charged for each day, showing you exactly where the cap was applied on your long-distance days. And it will show the total. There are no mysterious fees or surcharges. The entire model is built on this simple, transparent equation: a fixed cost for when your car is parked, and a capped variable cost for when it's moving. This simple structure is what finally aligns your insurance bill with your actual lifestyle. But this raises the million-dollar question, the one that's probably been nagging at the back of your mind this whole time. How do they actually know? How does Mile verify the mile in their name without turning your car into a surveillance device? It's a fair question. We've all heard the horror stories about telematics devices from other insurance companies. The ones that track your every move, every hard break, every late-night drive, and then use that data to potentially penalize you. It feels like having a backseat driver who also controls your wallet. This is where Mile fundamentally changes the game. They understood from day one that for this model to work, it had to be built on trust and transparency, not surveillance. They needed a way to measure miles that was simple, secure, and above all, respected your privacy. So they didn't create one method. They created two, letting you choose what works best for you. The first and most common method is a small device they call the mile meter. Now, when you hear device you plug into your car, your big brother alarm might start ringing. But hold on, this device is radically different from the telematics trackers you're used to. It's a small, simple plug-and-play device that goes into your car's OBD2 port. That's the same port your mechanic uses to diagnose check engine lights. It takes about 30 seconds to install, requires no tools, and you'll probably forget it's even there. Here's the critical difference. The mile meter is designed to do one thing and one thing only: read your car's odometer. That's it. It does not have a GPS tracker. Doesn't know where you are, where you've been, or where you're going. It doesn't track your speed. It can't tell if you accelerated too quickly from a stoplight or braked hard to avoid a squirrel. It doesn't know if you're driving at 2 p.m. on a Tuesday or 2 a.m. on a Saturday. It doesn't monitor your driving habits at all. Let me repeat that because it's the single most important technological distinction. Mile Auto does not track your location or your driving behavior. They are not in the business of judging how you drive. They are in the business of measuring how much you drive. The device simply takes a periodic encrypted reading of your odometer, the same number you can see right there on your dashboard, and securely transmits that number. That's the entire scope of its job. Think about the profound implication of this. Traditional usage-based insurance operates on a trust but verify model that feels a lot more like distrust and scrutinize. They say you'll get a discount for being a good driver. But then they define what good means. They watch you, they score you, and they hold the data over your head. Mile's philosophy is completely different. It's about fairness, not judgment. They believe you shouldn't be penalized for having to slam on your brakes because someone cut you off, or for driving home late from work. Your premium should be based on a single, objective, verifiable metric: the distance your car travels. The mile meter is just the tool that makes this simple, fair exchange possible. But what if you're still not comfortable plugging anything into your car? What if you're a purist when it comes to privacy, or you just don't want another piece of technology to think about? Mile thought of that too. This is where their second method comes in, and it's a brilliant low-tech solution that puts you in 100% control. You can opt out of the device entirely and simply send them a picture of your odometer once a month. Yes, you read that right. You just use your smartphone, open the Mile Auto app, and snap a quick, clear photo of your dashboard showing the odometer reading. That's it. You submit the photo, their system verifies the mileage, and your bill is calculated. It is the most straightforward and privacy-centric method imaginable. You are the one providing the data on your own terms once a month. There is no passive tracking whatsoever. This photo option is a game changer for so many people. It's perfect for the classic car owner who doesn't want to mess with the vehicle's electronics. It's perfect for the person who is deeply skeptical of any tracking technology, no matter how benign. And it's perfect for someone who just prefers a more hands-on manual approach. By offering this choice, Mile isn't just selling insurance. They are demonstrating a core value. They are saying, "We trust you and we want you to be comfortable." So, whether you choose the set it and forget it device or the monthly photo submission, the result is the same. Mile gets the one and only data point they need to bill you fairly. And this data flows directly into your user experience, which is primarily managed through their mobile app. The app is designed with the same ethos of simplicity and transparency. When you open it, you don't see a complex dashboard of driving scores, trip maps, and braking incidents. You see the essentials: your base rate for the month, the number of miles you've driven so far, and the corresponding per-mile cost. It's all laid out in plain English and simple dollars and cents. You can see your bill building in real time, which is an incredibly empowering feeling. There are no end-of-the-month surprises. If you have a month where you drive a lot, say for a road trip, you'll see the cost go up exactly as you expect. And in the months where your car barely leaves the driveway, you'll see the bill stay right down at that low base rate. This creates a powerful psychological shift. Instead of your insurance bill being a fixed, unavoidable expense that feels disconnected from your life, it becomes a dynamic number that you have direct control over. You start to see the real, tangible savings. You can literally watch the money you're not spending. For the first time, your car insurance bill makes intuitive sense. It reflects your reality. Let's put this into practice. Imagine a graphic designer named Chloe who lives in Austin. She works from home 4 days a week. She used to pay a flat $150 a month for car insurance, a cost that never changed whether she drove 1,000 miles or 100 miles. With Mile, she has a base rate of $40 and pays 5 cents per mile. She plugs in the mile meter and forgets about it. On a typical month, she drives about 250 miles running errands, going to the gym, and visiting friends on the weekend. Her app shows her the calculation. $40 base rate plus 250 miles times 5 cents, which is $12.50. Her total bill? $52.50. She is saving nearly $100 every single month, and the technology that enables it is invisible and non-intrusive. Now consider David, a retiree in Florida. He's wary of new tech and values his privacy above all else. He was intrigued by the savings but refused to plug any spy device into his beloved Buick. The photo option was made for him. On the first of every month, he gets a reminder. He walks out to his garage, snaps a picture of his odometer with his phone, and submits it. Takes him less than a minute. His driving is minimal, a few trips to the golf course, the grocery store, and to visit his grandkids. His bill drops from $120 a month with his old provider to under $50. He feels smart, savvy, and most importantly, in control. He wasn't forced to adopt technology he didn't trust. He was given a choice that respected his preferences. The technology in both its forms is not the product. The technology is the enabler of a fairer system. It's the simple, secure bridge between your actual car usage and your insurance bill. By stripping away all the unnecessary and invasive surveillance features that other companies push as benefits, Mile has boiled usage-based insurance down to its purest and most honest form. It's not about monitoring you. It's about measuring one number. This focus, this commitment to privacy and choice, is what makes the entire model not just work, but feel genuinely revolutionary. It replaces suspicion with trust and complexity with radical simplicity. But that trust, that radical simplicity, is only truly tested when the worst happens. It's one thing to have a slick app and an easy sign-up process when everything is going well. It's another thing entirely when you're standing on the side of a highway, heart pounding, looking at a crumpled fender. This is the moment of truth for any insurance company. It's the moment the monthly payments you've been making are supposed to transform from a recurring expense into a lifeline. And let's be honest, this is where most of us get nervous about new disruptive companies. We have this deep-seated fear that a low-cost, tech-focused insurer will be great at taking our money, but will vanish into a maze of call centers and legal jargon the second we actually need them. So, how does Mile's promise of simplicity hold up when you file a claim? The process is designed to mirror the sign-up. Fast, digital, and human-centric. The first step, right after ensuring everyone is safe, is typically done through their app or a quick phone call. You're not starting with a 40-page form. You're starting a conversation. They guide you through collecting the necessary information: photos of the damage, details of the incident, information from the other party. The goal is to get the ball rolling immediately, not to bury you in paperwork while you're still processing the shock of an accident. But this is where we need to pull back the curtain and look at the engine that actually powers the entire operation. Because Mile Auto itself is not the company that will ultimately be paying for your totaled car or the other driver's medical bills. This is the single most misunderstood, and yet most important aspect of how many modern insurance companies work. Mile Auto is what's known as a managing general agent, or MGA. Think of them as the brilliant architects and the friendly front office. They designed the product, they built the user-friendly technology, they manage the customer relationships, and they handle the day-to-day interactions. But the financial bedrock, the massive vault of capital required to pay out millions of dollars in claims, comes from their underwriting partner. In Mile's case, their policies are underwritten by Spinnaker Insurance Company. Now that name might not mean anything to you, and that's okay. But in the insurance world, it means everything. Spinnaker is a national property and casualty insurer, and here's the key part. They are owned by Hippo, a major publicly traded home insurance group. And more importantly, Spinnaker has an A-, excellent rating from AM Best. Let's pause on that for a second, because that A- is not just a letter and a symbol. AM Best is the gold standard, the most respected credit rating agency in the world for the insurance industry. They have been analyzing insurance companies' financial health for over a century. They do a deep, forensic dive into a company's balance sheet, its operating performance, and its ability to meet its ongoing insurance obligations. An A- rating is a powerful third-party declaration that the company is in an excellent financial position to pay its claims. It's an independent seal of approval that says, yes, the money is there. Yes, this company is stable. Yes, they can weather financial storms and still honor the promises they've made to you. This is the safety net you don't see. When you have an accident and file a claim with Mile, you're not just relying on a tech startup. You are tapping into the financial strength and stability of a highly rated, established national insurer. Mile handles the process, making it smooth and modern, but Spinnaker provides the financial guarantee. This structure gives you the best of both worlds. The innovative, customer-focused experience of a modern tech company, backed by the old-school financial security of a traditional insurance powerhouse. The fear of a new company not being able to pay is rendered moot, because the one paying the bill has been independently verified as rock solid. Now, with the biggest fear, the claims process, addressed, let's tackle the second biggest question that always comes up with pay-per-mile insurance. The road trip problem. What happens if you break your routine? What if you, a person who normally drives 400 miles a month, decide to take a 2-week cross-country vacation and drive 3,000 miles? Are you going to be hit with an astronomical bill that's 7 or 8 times your normal monthly payment? This is a perfectly reasonable question, and it's a scenario that would make a pure pay-per-mile model completely impractical for most people. Life is not always predictable. This is where Mile introduced a feature that I believe is the cornerstone of their fair use policy: the daily mileage cap. It's called the daily mileage cap on their site, and it is a game changer. While the exact number can vary by state and individual policy, the cap is typically set at 250 miles per day. In some states, it might be as low as 150 miles. What this means is that on any given day, you will never be charged for more than that capped amount of miles, even if you drive more. Let's put that into concrete terms. Imagine your per-mile rate is 5 cents. You decide to drive from Chicago to Denver, a journey of about 1,000 miles that you knock out in 2 long driving days, covering 500 miles each day. With a pure pay-per-mile system, that first day would cost you 500 miles times 5 cents, which is $25 just for the mileage portion. But with Mile's 250-mile cap, you are only charged for 250 of those miles. So instead of $25, your charge for that day is $12.50. You drove 500 miles, but you only paid for half of them. The same thing happens on day 2. Over those 2 days of intense driving, you've saved $25. Now expand that over a 2-week road trip. Those savings become significant. This cap is a built-in safety valve. It's Mile's way of saying, we want you to pay for what you use, but we don't want to penalize you for living your life. It transforms the service from a rigid, unforgiving mileage counter into a flexible plan that can accommodate the occasional and necessary long-distance journey. It removes the anxiety. You no longer have to do mental math before visiting family 3 states away or deciding to take that spontaneous weekend getaway. You know that there is a ceiling on your daily cost, a predictable limit that protects you from bill shock. This single feature fundamentally realigns the relationship between the insurer and the driver. It shows that the system isn't designed to catch you out, but to provide a genuinely fair alternative. It acknowledges that low-mileage drivers aren't just people who never go anywhere. They're people whose daily routine doesn't involve a lot of driving, but who still have the freedom to hit the open road when they choose. It's a crucial detail that makes the entire concept of pay-per-mile insurance not just viable, but incredibly appealing for a huge swath of the population. It's the answer to the biggest what if, and the reason the model works in the real messy, unpredictable world, not just in theory. With a claims process backed by a financial giant and a billing system that protects you from your own adventures, the practical foundation is incredibly strong. And that strong foundation is what allows us to ask the most important question of all. Is this revolution in car insurance actually right for you? Because for all the talk of innovative models and financial backing, the only thing that truly matters is whether it puts money back in your pocket and gives you peace of mind. The answer honestly depends entirely on who you are and how you live your life. This isn't a one-size-fits-all solution, and anyone who tells you it is selling you something. Mile Auto is a specialized tool, and like any specialized tool, it is brilliant for the right job and the wrong choice for another. So let's get specific. Who is the ideal Mile Auto driver? First, the new remote workforce. If your daily commute has transformed from a 45-minute battle with traffic to a 30-second walk to your home office, you are the poster child for this model. You're likely paying a premium based on an old reality, a reality where you put 15,000 miles a year on your car just getting to and from a cubicle. Now your car sits patiently in the driveway most of the week, used only for weekend errands or the occasional trip to the grocery store. Every month, you're essentially donating money to your traditional insurance company to subsidize the driver who is still on the highway every single day. For you, switching isn't just a potential saving, it's a correction. It's aligning your insurance bill with your actual modern life. Second, the urban dweller. You live in a city where walking, biking, or public transit is often faster and easier than finding parking. Your car isn't your primary mode of transportation. It's your escape vehicle. It's for the big weekly shopping trip, visiting family out of town, or getting out into nature on a Sunday. You might go 4 or 5 days without even starting the engine. Yet, traditional insurance penalizes you just for living in a city, hitting you with high base rates due to population density, and then charging you as if you drive as much as a suburban commuter. Pay-per-mile flips that script. You get the benefit of a car when you need it without paying for it 24/7 when you don't. Third, retirees and empty nesters. Your life has changed. The days of hauling kids to soccer practice and driving to a demanding job are over. Your driving needs are simpler now. Doctor's appointments, visiting the grandkids, meeting friends for lunch. You value your freedom and your budget. You're driving significantly less than you did 10 or 20 years ago. But has your insurance bill fully reflected that dramatic lifestyle shift? For many, the answer is no. Mile Auto allows you to finally pay a rate that matches your current, less hectic reality, freeing up funds for the things you actually want to be doing. And finally, the second car owner. Maybe you have a reliable daily driver, but you also have that classic car for weekend cruises, or a big truck you only use for home improvement projects. That specialty vehicle might only see 1,000 miles a year, yet you're forced to pay a hefty traditional premium just to keep it legally insured and registered. It's a frustrating expense for a vehicle that brings you joy, but is rarely on the road. With a pay-per-mile plan, the cost of insuring that second vehicle can plummet, making it financially feasible to keep your passion project or utility vehicle without feeling like you're throwing money away. If you see yourself in any of these profiles, the math is almost certainly in your favor. But to build trust, we also have to be clear about who this is not for. If you're a supercommuter with a 60-mile drive to work each way, this is not the model for you. You are the person that the traditional system is built for, and your high mileage would likely make a pay-per-mile plan more expensive. If you're a traveling salesperson, a real estate agent who spends all day driving between properties, or a gig worker for services like Uber, Lyft, or DoorDash, your car is your office. You rack up serious miles, and a flat-rate unlimited mileage plan is going to serve you better. Mile Auto is about fairness, and in your case, fairness means a traditional policy is the better fit for your high-usage needs. There's no shame in that. It's simply about matching the product to the person. Now, even if you fit the low-mileage profile, you might still have some lingering doubts. Let's tackle them head-on. The biggest one is often privacy. We've been conditioned to be wary of tracking. But let's be crystal clear about what Mile does, and more importantly, what it doesn't do. There is no GPS tracker. There is no little black box plugged into your car monitoring your every move, judging your braking speed, or tracking what time of day you drive. They don't know if you went to the gym or the donut shop. They don't care. All they need is a photo of your odometer once a month. That's it. It's the lowest tech, most privacy-respecting way to verify mileage. You are in complete control of the single piece of data they need. Another common concern is, what if my situation changes? What if you get a new job that requires a commute? What if you decide to take that cross-country road trip you've always dreamed of? This is where the model's flexibility shines. You are not locked in. If your driving habits change, you simply switch to a different insurance plan. There's no penalty. It's not a lifetime commitment. In fact, you can even use Mile strategically. No, you have a big road trip planned for July? Maybe you stick with your traditional insurer. But for the other 11 months of the year where you're barely driving, a pay-per-mile plan could save you a fortune. It's about using the right tool for the job at the right time. And finally, the ultimate question. Is it really that much cheaper? The data says that for the right person, the answer is an emphatic yes. Some low-mileage drivers report saving 40, 50, or even 60% compared to their old policies. Think about that. If your car insurance is $150 a month, that could be a savings of over $1,000 a year. That's not pocket change. That's a vacation. That's a significant contribution to your retirement fund. That's a real tangible impact on your financial well-being. Ultimately, what we're looking at with Mile Auto isn't just a different way to bill for car insurance. It's a fundamental philosophical shift. For decades, the auto insurance industry has operated on a communal risk model, where low-mileage drivers have been unknowingly subsidizing the costs and risks of high-mileage drivers. It was an accepted, if unfair, consequence of a system that lacked the technology to do anything else. That era is over. The new philosophy is one of personalization and fairness. It's the idea that you should pay for what you actually use. It's the same logic we apply to our electricity bill, our water bill, and our data plan. Why should car insurance be any different? This isn't just about saving money. It's about taking back control. It's about refusing to pay for someone else's 2-hour commute. It's about aligning your expenses with your actual life, not a life imagined by an actuarial table from 1985. So the path forward is simple. It's not about taking my word for it. It's about doing your own investigation. The next time your insurance renewal comes up, don't just blindly accept the 5% increase they send you. Take 10 minutes. Go to the Mile Auto website. Get a quote. Be honest about how many miles you actually drove last year, not how many you think you drove. Look at the numbers side by side. For some of you it won't make sense, and that's perfectly fine. But for millions of Americans, the remote workers, the city dwellers, the retirees, the second car owners, it will be a light bulb moment. It will be the moment you realize you've been overpaying for years, and you finally have a choice. This is more than just insurance. It's a smarter, fairer way to own a car in the 21st century. And it all starts with challenging the way things have always been done and asking one simple question: are you paying for the miles you actually drive?